Well, good morning, everyone. It's a pleasure once again for me to visit Korea. I've been doing this for a very, very long time, and it's always been a pleasure, and the professionalism here is always a big drawback for me, always pulling me in. So what I'm going to talk about today, as you all know, is a question that I've recurringly, and many others, I am sure, recurringly ask themselves. Just last week, I was giving a keynote at the IMF World Bank at spring meetings in Washington, D.C. Same topic because, of course, there are renewed concerns whether the dollar is losing its position as a global reserve currency, as a hegemon. So here, I'm not going to repeat or read my slide. This is the outline of what I plan to speak on. I will be fairly quick on some of the topics because I hope we can retake them during my conversation with Janil. I call him Janil because I've known him for a very long time, after this presentation. So let me start with a preamble, which is very important. And central banks, investors, do not hold dollars. They do not hold euros. They do not hold renminbi. They hold assets. They hold dollar assets, which means treasuries. It means equity. It does. So this is an issue that we will come back to because we're going to review what is the global demand for dollar assets. That's sort of a centerpiece of answering the question, is the dollar losing ground? The other point I'd like to make in my preamble is that, you know, there is a lot of headlines about connected to the loss of reserve status, that central banks have diversified away from dollar assets. We're going to address that. But let me say that today, in the modern era, looking at central bank balance sheets to know what official purchases of assets is not enough. The sovereign wealth funds have very large and very opaque balance sheets. Finally, you know, on asset classes, we have a new family, right? We have stable coins, we have crypto, we have, or are planning CDBCs. Only 3 countries have adopted CDBCs so far. But this is part of, you know, the financial evolution we've been seeing going on forever. I think those asset classes are here to stay. But you know, I will go back to that. So the current narrative is especially before the Iran war, the current narrative was the debasement trade. That you want to get out of dollars, you want to get out of fiat money in general and more into gold, and you know, things are not looking good on the debt front, things are not looking good on the monetary front. Everyone is concerned about whether more inflation is in the pipeline and so on. So it was basically any way you can move away from fiat money and the dollar in particular. All the reasons why one is concerned are quite legitimate. So I'm not debating the merits of the debasement trade, but I think a big point that I want to leave with you is do not equate short-run fluctuations in the dollar with the loss of reserve status. They're different animals. The dollar has had in the past not periods of weakness, it's had periods of crashes. It crashed in the 1970s. And, very quickly, 2025 was a great year for gold. It was the fifth biggest increase since 1900. But guess what? Does that really mean that the dollar's on the way out? Well, it had even bigger increases, multiple increases in the 1970s. The dollar did very poorly in the 70s. It was believed at that time that the yen or the Deutschmark would take over. But again, do not confuse short-run weakness with the long-term trend, which is what I'm going to talk about. Importantly, what are the markers of a reserve currency? Well, I've already mentioned that if you want to track what is happening in this space, you look not only at central bank balance sheets and how they hold their reserves. You have to look at what countries are doing in terms of their monetary anchor. Korea is a very dollar-centric in that respect. And you see that in intervention strategies by the Bank of Korea, and that is true for many countries. So you start out with looking at the role of a particular currency. Is monetary and exchange rate policy more geared towards the dollar, more geared towards the euro? And so that is one marker. Another marker, of course, is what currency are countries denominating their debts in? What is trade invoicing? What countries are, what currencies is trade denominated in? We're going to go through these markers, but importantly, we have to look at global demand for not just the narrow riskless asset, i.e. treasuries, but more broadly for dollar assets in general. And importantly, official and private sectors care a lot about, number one, currency convertibility, which means, in the words of a professor, the MIT professor now deceased that I admired greatly, Rudy Dornbush, when you find a currency desirable, it's like going to a party, that you go to a party because you can leave whenever you want to. And that is the role played by currency convertibility, that you can sell whenever you want to. Also, liquidity. Deep markets are important for reserve currency. So what do the data reveal? And this is not, so what I'm giving you here is my best interpretation of the data that's out there. What about the first thing that I put on the list? What does the global panorama tell us about which currencies are playing a big role as a monetary anchor in exchange rate and monetary policy? Well, this is based on long-dated studies that I have done with Ken Rogoff and Ethan Ilsetsky. This is the distribution. It's really about the dollar and about the euro. Thus far, it has not become evident that at this stage any country is anchoring its monetary or exchange rate policy to any other currency. There are a lot of countries also where you have banks receiving foreign currency deposits. Dollarization is deep and entrenched. This list, you have the PowerPoint. So I'm just going through it quickly. What it highlights is that when you look at highly dollarized or euroized economies, the dollar is still by far the dominant domestic currency used as well. What about treasuries, the demand for dollar assets? There's no question the global demand for treasuries, whether you look at it as a share of US GDP or as a share of total treasuries, it's gone down. It peaked around 2014, it peaked in 2014 and has declined since. All these data that I'm going to show you are from the flow of funds published by the Federal Reserve. It's the most authoritative data for the post-war financial history of the U.S. Is this cause for concern? Absolutely. The U.S. is issuing a lot of debt. And the rest of the world's appetite for U.S. dollar debt hasn't quite lived up to the amount that's being issued. However, if you look at the distribution of central bank holdings of reserves, yes, the dollar share has gone down, but it's very modest. And I would note that for many of you who are, as in the title suggests, are thinking about has the renminbi or the yuan made inroads, that is the red share here, and it's still very, very, very small, very small. Where the big bang comes for the dollar in recent years, I said it's not a demand for dollars per se, but a demand for dollar assets is in the equities. And what this shows is rest of the world holdings of U.S. corporate equity. And this is at an all-time peak. And Korea has a lot to do with that, right? Inflows of Korean residents into the U.S. equity market are, I'm sure, very well known to you. But this is what the aggregate data shows. So is the dollar out? Well, if you take a look at asset holdings in terms of not treasury securities, but equity, it's at an all-time peak. And in effect, just to preempt the question, if you look at total financial assets, which includes treasuries, it includes equity, it includes foreign reserve, Federal Reserve foreign RPs, it includes corporate bonds, the demand for dollar assets is, as you see, at a post-war peak. So you can guess where I'm going with this. Now, many of you, understandably, I've done a lot of work on China and China's overseas lending. We read a lot about the Belt and Road Initiative. We read a lot about the very large footprint of Chinese lending overseas. And you see this chart, which is taken from work that I've done with Sebastian Horn and Christoph Trebisch, and indeed you see that debt owed to China is now bigger for developing countries than debt to the entire Paris Club, which includes the US, France, UK, Germany, and so on. However, does that mean, well, is this going to create a demand for renminbi or yuan to repay this debt? Well, no, because the majority of Chinese overseas debt is denominated in dollars. This figure comes from the World Bank, and it shows the total amount of external debt and the share of that total debt that is denominated in dollars. And here's another one where since 1970, it's at an all-time peak. Okay, so where am I going with this? I hope you see the pattern that, we certainly see the fraying of demand for treasuries. We certainly have a lot of concerns about the way the U.S. is heading, and I'm going to talk about that imminently. But in terms of the markers that are followed historically, that are indicative of the standing of a reserve currency, we don't see the cracks yet. Invoicing, this is trade invoicing. This comes from the work of Gita Gopinath and others. Gita was a former IMF colleague at Harvard and former IMF chief economist and first deputy managing director. This work is on currency invoicing, trade invoicing. China's trade footprint is enormous, but it is still notwithstanding recent increases, which you will see in the next slide, what this chart is showing is what share of global trade is invoiced in that currency. The US and the euro are pretty much tied. That's the first panel. Okay, so the first panel shows you that there's pretty close in terms of trade invoicing between dollar and euro. Other currencies, well, much less. The middle panel says, okay, if you take out the Eurozone countries in third-party trade, is the euro still being used? And the answer is no. In the middle panel, what you see is the dollar by far has the largest share of trade invoiced in dollars. Finally, the third panel includes in red China, invoicing in CNY. And you see that is indeed a very small amount. It is a growing amount, as you see, because Chinese trade is so important relative. I was surprised to what extent this research is not mine, but this is, as far as I know, the best constructed data on global trade invoicing. The renminbi has made invoices, but look at the scale on that. The scale is from 1 to 3. The previous scale was from 1 to 75. Okay, so it's still a very small share of global trade. I'm going to go extremely quickly because I hope in the conversation I have time to reiterate or expand on some of these points. What about stable coins? Well, a lot of the stable coins use the US treasuries as backing. In a way, in effect, stable coins work a lot like what currency boards, that every time you issue one, you have to back it with it's collateralized. And so it's increased actually private sector demand for treasuries. And I would say that I think stable coins are extremely promising for use in the very large network of global remittances. In effect, work that I've done in that already highlights that process is well underway. We'll talk more about CDBCs. They're very early stages. Only Jamaica, Nigeria, and Barbados have CDBCs. Many countries are studying. We can discuss later in our conversation. What about crypto? Crypto has fascinated me for a long time because I've studied financial crises for a greater part of my life. Crypto is tailor-made for capital flight. It's been a vehicle for capital flight. You see it surge wherever the local currency is crashing. I have illustrations here from Argentina, from Nigeria, from Ukraine. I could add to this Lebanon. I could add to this Venezuela. I could add to this the brief period in 2017 where it was thought Greece would exit from the Eurozone. So crypto is a vehicle for flight to a hard currency, whether it's dollars, euro, or something else. What about, in my last couple of minutes, is there something to worry about? There's plenty to worry about in the direction of the US has taken, especially the current administration. Debt, the lack of central bank independence, that is the threat of lack of central bank independence. This sets a really bad example for the rest of the world, but it's also quite damaging over the longer term for a currency, a reserve currency. And this just highlights how much the central bank, the Federal Reserve's balance sheet has blown up over time. However, let me turn to the final bottom line. So the reason I keep highlighting do not confuse dollar weakness with a loss of a reserve currency status is because you have to answer the question, okay, so if the dollar doesn't work, what does? The euro? The euro is a single currency, but they have very fragmented, remember, asset markets, they have very fragmented debt markets with relatively limited liquidity, and a unified market is still, at this stage, aspirational. What about the renminbi? I already mentioned that it certainly has the large footprint, bigger than the US by some measures in terms of PPP-adjusted GDP. It has a unified domestic debt market, but it has the lack of convertibility, the deep capital controls are problematic for international use. My final slide. So, in economics, the saying goes, it takes a model to beat a model. And, my conclusion is we don't have an alternative model at the time. The dollar did eventually displace the pound, but that was a slow process, and it took 2 world wars, which devastated both the UK and the status of the pound. So I'll leave it to you and hope we can retake this in the conversation, that while there is plenty of time, plenty of reasons to expect dollar weakness as we move forward, because many things are going wrong in the US, I think it is way too premature, and we've seen this movie before, to say that it is over for the dollar as a reserve currency. Thank you very much.
네, 그렇다면 기조 연설을 바탕으로 한 대담을 또 바로 진행을 해보도록 하겠습니다. 오늘 대담은요, 고려대학교 경제학과 페드 출신의 김진일 교수님께서 좌장을 맡아주시고, 또 기조 연설을 해주신 카르멘 라인하트 석좌 교수님과 함께 심도 있는 논의를 이어갈 예정입니다. 두 분 무대 위로 모셨습니다. Please welcome with a warm round of applause for two person, please.
So Carmen, thanks again for a very informative and also passionate lecture. Yeah. So let me start with where you ended about the U.S. situation. It's about fiscal situation, but from more short wave. When you are waiting for the plane in Boston, you must be watching the hearings for Kevin Walsh. So from your experience in the US from the 80s, how did you watch that? Especially about Kevin Walsh's view of the US, the reserve balance sheet, which will have impact on US fiscal situation, to interest rates, and also the Korean financial markets. So what's your view on that? Yeah, please, Mike. Yeah.
Can you hear me? Okay. So Janelle, this is also a recurring question, because it's intimately connected with what I rushed through when I mentioned lack of central bank independence, okay? So just quick background, I think the US, like some other European countries, got lulled into debt is no problem because interest rates are low forever.
Right.
And this was the low for long era.
You can say that forever, yeah.
Yeah, and it was the expectation, right? That is not a problem. Now, the rude awakening, of course, came with a big spike in debt servicing costs, which, of course, prompted, you saw my quote, I hope, and you have it in your booklet, Trump saying, I want this guy to lower interest rates. So my concern, not a personal thing about Walsh. This is not a personal, but the situation is one that has, I remembered, I mentioned that the 70s were not a good decade for the US. Well, we have a lot of the 70s right now with us. We have a war in the Middle East and very uncertain path for oil prices. We have a bias towards higher inflation, which we've already seen. We have a bias to lower growth, which we're beginning to see. And we have an institution that's under fire to deliver short-run solutions. So this is why I mentioned do not be surprised with dollar weakness. Do not be surprised that the short run is a very unfavorable scenario reminiscent of the 70s.
I see. So I don't know if it's available or not in, say, CNN, but if you can watch the hearings for, say, Arthur Burns in the 70s, how was it like? And then that may provide us to give some forecasting ability, for the immediate future, I think. So let me go to the dollar issue. Yeah. So you mentioned about the current situation of the dollar, which is decreasing but very slow rate. And also you talked about euro and yuan and other assets as well. So yes, I agree with you that it's still going on for a foreseeable future. But if you look at the longer period, maybe none of us will be there, but nothing is forever, like the British pound or old imperial currencies, for example. So if you look at what's the harbinger or what's the thing we should look at, if you want to forecast in the long term, what do you think would be the early warning indicators say?
So look, that's an excellent question, and I tried to conclude precisely on that note. Look for the alternatives, right? So the indicators, the space we covered in fairly lightning fashion, I may add, was a lot of space, right? Global demand for assets, reserve holdings, currency, debt denomination, trade invoicing, a lot. You look for signs that something is ticking on the other side. I would also, add that a big unknown is geopolitics. I noted that one thing that propelled the British pound out of the, that just set the stage for the dollar was World War I, right? Let's hope it's not a replay, okay? Let's hope it, but.
I see. Okay, that's interesting because what people look for is, how is the dollar getting weakened? That's what we are looking for. But you say, no, it's not the way. How is the yuan strengthening?
Not even.
Yeah.
No. Look, currencies go up, currencies go down, currencies go sideways. They're an asset. Their prices fluctuate. That's not, necessarily going to be, unless, of course, it's very persistent. I agree with you, nothing lasts forever, but, the dollar crashed when Bretton Woods broke down, 55% lost value against the Deutschmark. This is just 1 second in terms of an anecdote. I was in Tokyo in March of 1995. This is the last intervention between the BOJ, the Bundesbank, and to support the dollar. At breakfast, I look at the breakfast bill, and I said, my God, I just ate my per diem because it was so expensive.
Today you did not.
So, it's happened before. We've been there before, but the dollar still,
Yeah. But since you mentioned the episodes of Bretton Woods, so if you put it longer, you said that dollar is from the historical perspective. Should we consider, say, the Bretton Woods and Nixon shock in the same medium run or low run, longer run or low frequency movement of the dollar?
So, look, the breakdown of Bretton Woods, the Vietnam War, the fact that we had a lot of monetary accommodation, set the stage for the terrible 70s.
I see.
But then Paul Volcker came in.
Yes, 79.
79, October 79, that was a turning point. So, but during that period, Japan never really pushed the yen as an alternative, even though at that time Japan global footprint was much greater. the Europeans turned to Germany. So it was clear that the Deutschmark was the monetary anchor for Europe. But it didn't go beyond Europe.
I see.
So
Okay.
again, back to alternatives.
I see. Okay, thanks for the international perspective. So let's turn to the Korean, the market. I mean, everybody here knows how well. Maybe you heard about it since you worked at the Wall Street yourself for 5 years. About the Korean stock prices. The index has been kind of skyrocketing. I think it's more than doubled during the last several months. It's a history, for sure. And I didn't check this morning, so maybe we don't have to break record or not, I don't know. But there's a heated debate on whether the recent surge, the last several months in the Korean equity markets is due to the fundamentals or to some euphoria related to say AI or other digital assets. So since you have a very unique perspective because you studied at Columbia and got a job at the Wall Street first and then IMF, World Bank and the academia. So what's your view on this question about, not about bubbles, but about any tips on the Korean stock market in the recent days?
So, that's $1 million question. And I'm not copping out. You'll get my, direct view. When you say fundamentals or euphoria, the two are not mutually exclusive, right?
Right.
If you look at the fundamentals, how Korea's industry, semiconductor industry, is poised within the development AI, the demand, the prospects, it warrants an increase.
Right, yeah.
But I'm very fond of charts, as you may have guessed. First thing I did when I started hearing about the Korean equity market is do a plot of the KOSPI from, in real terms,
right.
deflated by CPI since 1962.
So you sent me the chart. So
I said,
if they can make it ready, I can show you the chart you sent us.
It's an all-time high.
It's in the book as well, yeah. But if you can make the slide, I will happy to.
But, okay, so it's an all-time high, but what troubles me.
Oh, yeah, here it is.
Yeah, that's the chart, okay? What troubles me is twofold. In speaking to, various market participants, including from hedge funds and so on, you get the remark, oh, but price earnings ratios are so much lower than the US. That's not the comparison, right? What you do in typical indicator, I review a lot of indicator analysis, is you compare it to its own history. And the next chart, which shows price earnings ratios, and this ends last Friday, which means that now it's up again, and so it's even the last decade average was around 11. So right now it's about twice that. It's a very sudden surge, and in Wall Street, that's why I say, look, the debasement trade has a lot of rooted on real fundamentals, but it's gone a little overboard. I think I am very concerned about a rude awakening on the equity market, because I think we've entered a phase that it starts to look really bubbly. Although, to reiterate, big increases, I think, are warranted, but the speed and magnitude are kind of dizzying.
Right. Yeah, actually, I checked my phone and then I got the news feed that Korean KOSPI broke 6,500 this morning. So every morning they break a new record. So.
Absolutely. In the little writing that you see at the bottom of the chart, what to call a market expensive, the price earnings ratio has to be more than 2 standard deviations away from its mean. and right now we're kind of, like 6 standard deviations away from the mean. So yes,
So we are there. So yeah, we are breaking the records every day, and then with a grain of salt. So we should consider correctly.
but be it from me to forecast, be it the dollar or the Kospi or the Dow or anything else, I'm just saying what some of the symptoms look like.
Yeah. So now that we looked at the recent few years of the Korean financial markets, let's broaden the horizon a little bit, for the Korean financial markets, because Korean markets have shown an extreme degree of volatility, not only the recent one, but also since the war broke out in the late February. And whenever there is a volatile international environment, Koreans worry a lot because of its experience in 1997-98 crisis, and also 2007-2008, the global financial crisis. And maybe reflecting that the Bank of Korea Act was revised in 2011 to include financial stability as the second mandate. So it's like a hierarchical mandate. It's not really dual. So it's not as important as price stability, but it's right after that. So I would say Koreans pay attention to financial stability. That's what they say. So given your expertise in the financial crisis, what do you think the risk the Koreans or Korea or Bank of Korea, you can choose which one, should be particularly aware of?
So, if you go back, you mentioned the global financial crisis. The global financial crisis, in a super nutshell, the countries that were most affected, the US, the UK, Spain, Ireland, Portugal, all of these countries had a housing bubble. Korea, if you look at vulnerability in terms of foreign assets, the foreign non-residents holding Korean dollar debt, treasury debt, that's not where the vulnerability is going to come from, okay? The vulnerability, I think, the biggest sources of fragility for me certainly are twofold. One is more short-term, the other is longer-term. Let me start with the longer-term very quickly.
Sure.
I think the level of household debt, the Bank of Korea has written about this. Their financial stability report really is, absolutely. Look, one of the lessons from the global financial crisis, and from many of the crises that I've studied through history, is that what is private debt before a crisis becomes public debt thereafter. The effort to bail out institutions, whether they're financial institutions, whether to help households, whether to support corporates. And so I think that there's two things that I want to flag here. One is the level of indebtedness and the level of exposure of banks to real estate is very high by international standards and by Korea's own historic standard. The second is, this is actually an underestimate because, I really pronounced it very badly. Was it Jason?
전세. Yeah.
Okay. He said it, okay? God forbid that I should try to repeat it.
But you wrote correctly over there.
But it adds another layer to the debt problem. I think, so that is a structural issue that I think, and if you look at the financial stability report, we are seeing some fraying at lower income households. The other issue, the shorter term issue, is the volatility issue that you have mentioned. I noted that sudden stops, capital flow reversals aren't likely to come from a big sell-off of government bonds. They could come from a sell-off of Korean equity.
Sure. Yeah. Okay. It could. Yeah. Oh, I see. Okay. So those are the risk or worries or some moment we should be aware of. Yeah. Maybe we need a harbinger for those moments. Yeah. Okay. Okay. So you mentioned that this year is the second visit to Korea during the last 6 months. So when you visited and gave a breakfast talk late November, I was there. And then your comments on macroprudential policy and financial repression intrigued many Koreans, including myself, because actually when I went to the United States as a graduate student first year, Xavier Salai Martin was my first macro teacher, and he hired me as a research assistant to look for indicators of financial oppression, right? His typical growth regression. And he chose me because Korea is a perfect example of oppressed finance. But all those measures are now called macroprudential regulation after 2008, yeah? It's a change of the names. So Korea is a very prominent example of both financial oppression, but also macroprudential regulation like the LTV, DTI, yeah, and those things. So that's why your comments on observational equivalence between macroprudential regulation and financial pressure was intriguing. And then you mentioned that that's an equivalence from an empirical standpoint, right? So then if you go to the normative standpoint, how are we able to identify the two separately, or if so, how? Because we want to impose, I mean, most of them, I saw change exchange card with the very senior bank officials, private banks, and then whether that's a macroprudential regulation, it's a good thing for the country, but it's a financial oppression, it's bad for the country. That's a very highly loaded word. And what should we look at from the normative perspective?
Okay, let me be very, very clear. Korea had, as you noted, financial repression for many years. But I think it moved beyond that for a long, long time. My comments actually were primarily about the US, the UK, and other countries that had a crisis, a systemic banking crisis in 2008, 2009. And how do you distinguish between macroprudential and financial repression? Well, sometimes you can't distinguish, but let me give you one specific example. In Korea, you haven't seen the pension funds or banks or other financial institutions are required to hold a higher share of government debt. That is a classic, right? You could say, that's warranted because, government debt is more liquid, right? So it's macro-proof. But it's also how convenient, right, if you have a rapidly rising level of debt. So let me be very clear, that we have not seen in Korea. I think a lot of the macroprudential measures that I was specifically talking about, I have a paper on this called The Liquidation of Government Debt.
Yes, already, yeah.
That basically highlights when you start seeing the government creating captive audience for its debt,
I see.
that's a sign of financial
I see.
repression.
So that's
I
the
hope
way
that
to look
helps.
At. Okay. So if you look back 2007, 8, I was working at the Federal Reserve. So what should we have looked at, say, for the case of Lehman? If you look at the oppression, what were the measures maybe that's not available then, the Federal Reserve failed to look at, if you look, to the...
So it's always easy to identify failures with hindsight, right?
Yeah, Monday morning quarterbacking.
Right,
Yeah,
yeah.
I can do that. Yeah.
But there were warnings about the Fed, like other central banks. It's not part of their mandate to deal with asset prices, right?
Right.
I mean, you have an inflation mandate, you have an output gap mandate. So what was the Fed missing at that time? Well, it was missing that housing prices, were way off their peak in terms, way off their historic norms. And that was true pretty much.
Yeah, the mandate, I agree. Yeah, because that's my rationale as well.
Right.
But still, they did worry about financial stability, of course, and they look at the subprime mortgage, for example. Like that's one Ben Bernanke asked the staff to look at. And then that your husband was working, and then, my boss, by the way. But of course, it was done more by the domestic guys about how big is the subprime sector and what would be influence the financial market. And we underestimated it basically, right? So that underestimation is, I think, your measure of financial oppression. It's so oppressed. So when something happens, it just blows up. Like our body, when something goes wrong, we didn't expect that, but it happens. So I think that's oppressed one, as you said, exposed. We can, that was the problem. The Lehman, for example. But nah.
I think one thing that is very opaque, is if you look at the topic of financial contagion, it is plagued by opaqueness.
I see.
I think the extent, for example, German banks during the GFC didn't have a housing bubble. In effect, housing prices in Germany had been flattened down for some time, but they had bought U.S. Subprime mortgages.
Right.
And so those linkages, which you don't often pay
Realize,
attention to,
yes. I got it.
Yeah.
Okay, so
And my motto is
linkages.
usually think the worst.
I see.
Yeah,
Okay. You should
in terms of potential amplification.
So expect the worst and think about what could happen in what they usually call worst case scenario.
This is self-serving, but it is true. I wrote a short piece which was published in January of 2008 called "Is the Subprime?" And the Fed looked at this with Ken Rogoff.
Yes.
And
I read it.
okay, it's basically, and when we presented that at the American Economic Review in December of 2007, if this doesn't happen, we're going to look like idiots. Because what we basically said in that piece is this has a lot of the symptoms of a systemic banking crisis.
That's like 3 months before the Bear Stearns
Yes.
collapsed.
Yes.
Okay. I see. That's personal to you as well.
Yeah.
So, the central banks, does the central bank balance sheets come in that angle as well for,
So,
macro proof? Yeah.
so what is the take? What are we showing here? This is a correlation, a simple correlation. Look, you've heard us talk here about the loss of central bank independence. And I'm particularly worried because a lot of the advanced economy, this hasn't happened in Korea yet. Now, of course, the IMF is already raising issues about whether Korea's debt is going to grow very rapidly. But what this chart shows is the correlation between the level of government debt and the amount held by the central bank. And they're very positively correlated. So the tendency for the central bank to accommodate is, to me, troubling.
I see.
Why? Because it enables, it keeps interest rates lower than they would otherwise be, and it enables further borrowing.
So you think that these rates is sort of too low for that reason?
Absolutely. I've gotten pushback on this from my colleagues, like Larry Summers, Olivier Blanchard. No, rates are exceptionally low because we have,
Secular stagnation.
yes, secular stagnation, but the thing is, what this chart shows is the real short-term policy interest rate. You see 4 periods that are shaded. World War I, World War II, the 1970s, which I've referenced several times, and the period since the global financial crisis. Exceptionally low real interest rates. They were all periods of financial repression. They were all periods of very accommodative monetary policy.
I see.
So if I just conclude on this is, real interest rates finally have turned positive again, which is the historic norm. Did demographics change? And I'm
Sure.
not aware of it.
Yep. Demography as well, especially in Korea. Yeah, for sure. I see. So that low rates for those gray periods are too low for macro fundamental standards. That's what
Yes.
your view on that.
Yeah.
And then the Summers and others' view on the secular stagnation should not be as strong as that.
Yes.
Okay, it could be something.
Yeah, absolutely. I don't
You're not
deny
denying
that.
that?
I
Yeah,
do
yeah.
not deny that.
But that's something more
Yes.
than secular station going on over there. Okay, so let's switch gears and about the current Korean policy, like the financial policy. So I don't know if you heard about it, but the current administration, I think we heard the video from the Vice Prime Minister, but the financial authorities emphasize what they call the productive finance as it's the motto for the financial stability and the financial policy itself. Because, let me put this in context, because you mentioned about 전세 and real estate sector thing, and it shows that real estate sector received too much financing in the past, at least since the 97-98 crisis, which was due to the firm side. So they switch it to household side, maybe switch it too much during the last, say, 30 years. And so what people think, especially the government thinks, is the productive industrial sector received too little investment. And this financial drive from the housing sector to the industry, if it's too fast, that also could create problem in the future, say the 97-98 crisis as we saw. And you mentioned about the Korean investors, the investing overseas, which is what they call the Western ants.
Yeah.
And you heard about it, I'm sure. But also in the domestically as well, the many investors, especially young investors, borrowed a lot of money, maybe I think too much money in the capital markets, and they invest in Korea and also in the US capital markets. So when we evaluate, given that you have investigated the global financial crisis and history for a very long period, so what do you think the Koreans, like for example, the 한국경TV media, who is hosting it, or the government should look at to evaluate whether some change of the policies into, say, productive finance is good or bad? Or I shouldn't say bad. How much is too much and how much is the optimal? What should we look at?
Look, it is tricky because you also have to change incentives for the banks.
Yes.
Many
of them are here.
lending with collateral is very attractive. But lending with collateral will also not save the banks if they're overly concentrated and prices come down. Mm-hmm. That was very much part of the story of the global financial crisis. So and I agree with you. One has to be cautious that there isn't, a sort of propelling swift redirection of lending into highly risky startups. Okay, that's okay. You have to measure risk. You have to have an assessment of risk. But again, there are risks on overconcentration. If you look at systemic banking crisis through history, it's overconcentration in housing, overconcentration in commodities. of course, in the run-up to the 30s, there were also over-concentration in equity, which is obviously not an issue. But so there are risks to doing nothing also. My sense is that the direction is good. The direction to Korea's, because of a big challenge Korea and many other countries, but Korea faces it, for sure, is the demographics are such that growth is poised to slow further. It's leaning against, the headwinds to growth are big.
I see.
I think an era of faster growth in Korea also had, there was more financing available for investment. So I think we need to take the risk of doing nothing also very seriously.
I see. So there is a related question just came up here. So we talk about the financial policy, but if you broaden the government policies, on which we are not experts, but anyway, so from the angle of the fiscal policy, or these days what called industrial policy, about industrial policy, there is a big issue until '92 when I went to the United States, and nobody worked on it until Trump came in. So from the perspective of the fiscal policy and also the industrial policy, what should the government help this transition to productive financing from that angle?
So look, the thing is, first, industrial policy has become much more accepted now. And it isn't just Trump. I mean, the Draghi report.
Yes.
If you look at the Draghi report, industrial policy, it's written all over it. However, industrial policy has, has a mixed track record, right? I mean, it has worked well in some cases, but also it has worked abysmally in Latin America, in the industrial policy for the 50s and 60s is basically what Trump is using today, which is, you want to do import substitution, you want to do protectionism, and it was industrial policy with abysmal results. Asia did much better as a region. So it's not new. I think one thing that I would caution is industrial policy also has fiscal strings. And, we are in a situation in which debt is again, not a big issue right now for Korea relative to what we see, especially in other advanced economies.
Sure.
But, there are pressures to do industrial policy, there's pressures to green, there's pressures to deal with better safety nets given an aging population. And there is, if we are indeed out of the low for long or low forever real interest rates, greater debt servicing costs. So it's competing.
Okay. So as we have to look at the fiscal consequences of the financial policy, we have to watch out for the fiscal consequences for the industrial policy.
Yes.
So that's where,
Yes.
Oh.
And it is competing with other, we hear about the need for a greener economy. We need for the fact that the demographics themselves are, pivot towards a greater debt burden. The issue of debt servicing burdens for Korea are very low. But that's another area that we've already seen it in the U.S.
Intriguing to me personally, because when I was working at the Federal Reserve for about 10 years, we used to call the IMF, where you worked at, as it's mostly fiscal.
Yes.
Yeah. And then you tell me that even though IMF is doing a lot of financial things, but what's driving or what we should worry about is the fiscal. Okay.
It's mostly fiscal.
I
It's
see.
been a very appropriate joke. But I think it is apropos if you look at some of the issues that one encounters, like problematic monetary policy, i.e. Fiscal dominance. Well, the root of the problem is fiscal. It gets transmitted to to the monetary. I think, that is why I also highlight that there are a lot of demands on fiscal policy at the moment, and I think selectivity is very important.
Yeah. You taught me more than the IMF taught me the last 10 years there. Okay, thanks a lot. Okay, and we have about 12 minutes, so okay, I do not steal too much steam from the second session, but maybe it's an introduction second session that about the stable coins a little bit, not for the whole thing, but at least for your angle. So I don't know how many times you have to spend the dollars or Korean currency while you are in Seoul until tomorrow, but exchange rates have broke 1,500 for the first time since the global financial crisis. Now it's below, but it broke 1,500, like the March of this year, I think. Yeah, and in this situation of high exchange rate or the low value for the Korean currency, introduction or discussion of the stable coin in terms of Korean won and is debated right now, let me say, and that it was touched on by the new governor of Korea, Hyun Shin's the speech yesterday as well. And what do you think from your study of the financial history, especially the key currency versus non-key currency, if the stable coins are introduced, how would the effects differ between the key currency like the dollar and the currency like the Korean won or other smaller countries? What's your view?
So I have a former student that I have worked a lot with and currently working, Clemens Graf von Luckner. He's spent a year in Stanford and is going to the IMF. He's done a paper, looking at stable coins, crypto, a lot of, data. And Korea has the highest volume
Yes.
and a remarkable volatility. So you asked me about what is triggering the weakness in the won. And this is connected to a point that I had made earlier. You look at that figure that I had, foreign holdings of Korean government debt. And typically, in the big crises, you often see a sell-off of the debt, and that triggers the currency. And a lot of the won weakness is very homegrown.
Yes, okay.
And it is demand for non-won assets, right? You go into stable coins, and as I noted, stable coins are backed by treasuries. You're really doing a dollar play.
I see. Yeah.
You go into U.S. equity, and you're doing a dollar play. So, you mentioned the global financial crisis, and during the Asian crisis, you mentioned also the Asian crisis. The Asian crisis, people have remembrance of also an earlier crisis, the exchange rate mechanism crisis in Europe in 1992, and they have visions of Soros, bringing down the pound, and the Bank of England lost half of its reserves in 5 hours.
Right.
But the real catalyst to the collapse in the rupiah, okay, the Indonesian rupiah lost like 65% in it, and it was corporates trying to prepay their dollar debts.
Oh, okay.
So what I'm saying, you really have to look at, the domestic behavior. The volatility is but not imported necessarily.
Not purely for it.
Yeah.
What's happening inside?
But let me say, I think one thing that could be, very positive for the won, I think the won is getting listed finally in many indices, international indices.
Okay.
That if the trend towards diversification into other assets, creating that larger international pool in pension funds and, sovereign wealth funds, and getting listed has been I think a positive step in.
Okay, that's great. Yeah, okay. So we have about 8 minutes left. So anybody want to raise a question on the floor? We can entertain one or two before getting back to the last question. Or anybody? I cannot see very well, but yeah, there's one on that side. Can somebody bring a microphone? Yeah, it's right there.
한국말로 하겠습니다.
네.
지금 굉장히 좀 프랙티컬한 질문을 좀 드리고 싶은데, can you put on your?
I'll translate
Oh,
later.
yes.
Yeah.
지금 현재의 미국 금리 수준을 어떻게 평가하는지 알고 싶은데요.
네.
사실 우리 교수님은 저금리에 대해서 부정적인 생각, 부채를 불러일으킨다는 그런 생각을 가지고 계신데, 현재 미국의 금리는 굉장히 빠른 속도로 올랐다가 사실은 어떻게 보면 조금 점진적으로 내려가는 추세인데, 현재의 금리 수준을 높게 보시는 건지.
지금 정책 금리를 주로
기준금리,
말씀하시나
기준금리
기준금리.
네네.
So she said, if you look at the Fed funds rate during the last 5 years, say after COVID, after temporary, and then they shot up and then came back. So do you think the current rate is too low, or the last 5 years it fit with your story of the too low real rate as well?
So that's an excellent question, first of all. Thank you. The federal funds rate remained in negative despite despite the pivot in Fed policy.
And by pivot, you mean 2022?
Yeah, exactly, to raise rates. It remained in negative territory for some time because it was so low.
In real terms?
In
okay.
real terms,
Yeah.
in real terms, which is what so if you look at the federal funds rate from a historic perspective, it's still below historic norms, okay? What are other indicators, though, saying? I mean, there's a tendency to think, well, policy has been much tighter because we have seen a correction in the central bank balance sheet, because we did see the raise in rates. But you look at credit spreads, and until recently, and even now after some widening, they're very tight. That is an indicator historically of liquidity, and it suggests it's fairly accommodative. If you look at price earnings ratios and asset prices, the equity market, notwithstanding the bad shocks we have had, and they're pretty bad, they remain buoyant.
You mean your president, right?
This is, these are indicators that liquidity conditions, in my interpretation, and this is not just my interpretation. If you read Kindleberger, fabulous history of
Sure.
these are markers of global liquidity, and they look pretty accommodative at the moment.
I see. Okay, thanks. Yeah. So you have 5 minutes left. So you mentioned that you spoke at the spring meeting of the IMF.
Yeah.
I don't know whether the Bank of Korea governor Chang Yong-ri was there or not. If he were there, what did you tell him, or what would you have told him as an outgoing governor to him? And then, Hyun-shin, the new governor, very well. He's starting his third day today. And what would you tell him if he calls you up this afternoon? Okay, hi, and then what's your advice for me? So they can write it in the newspaper, yeah? And what's your advice for him for the last 3 minutes? Yeah.
He always puts me in these difficult spots, right? But I think if you read his speech,
The new governor.
yes,
Yes, I did.
I think I'll tell you the takeaway that I liked very much. He's worried. He's worried about growth. He's worried about volatility. He's worried about financial fragility. I think the focus on broadening the scope for the mandate for financial fragility is very on point. So I think my advice is do what you said you're going to do. I think it is a good sign. Complacency, I think, is usually the biggest problem for a policymaker. And I think the sign that he is concerned about many of these important issues speaks well.
I see. Do not be complacent. Okay. And did you meet Chung Yong-ri when he was in Washington last week?
No, I
Okay.
didn't. I didn't.
Okay. What would you have said? What would you have said for the last 4 years?
I think good job.
Okay.
I think good job. I look, what have we had? We've had one shock after another,
Yeah,
right?
Yeah, the last 4 years for sure.
No, we've had, we've had COVID. We had Trump 1. We had, COVID. We had Trump 2. That's a big shock.
And we had martial law in Korea.
Yeah, indeed. I'm even just speaking to the external. The Russian invasion of the Ukraine, you cannot, the Iran war is mimicking to some degree that.
Yes.
And by the way, I'm not so optimistic as futures market. I think futures markets are
Too
way
optimistic.
optimistic. But my basic would be good job. You were dealt a very difficult hand.
Yeah. His 4 years was difficult. I mean, for all governors, it's a tough job. But
I think it, even leaving aside the very deep issues,
right.
domestic issues, the global panorama, you have to admit,
Right.
has been.
Yeah. Okay.
Yeah.
So since we have 1 minute, so last question. So
You
men-
promised that was the last one.
Oh, sorry. Yeah,
But
we
that's
have
okay.
still- yeah,
It's all
one or
right. It's
two,
okay.
yeah.
It's okay. Go ahead. Go ahead.
And for you mentioned about World War I, World War II for the dollar. So for the Iran war, it would not be the catalyst for sure. But when you look at the war from your angle, what's the feature you want to look at for your understanding of the financial development? Yeah, you read newspaper, but what do you look at more?
So look, the acceleration from the British pound to the dollar, I noted, involved 2 world wars. These were world wars that left Britain, both in World War I and later again in World War II, with a huge, huge debt burden. By World War II, it had lost its colonies.
Yes.
These are not your run-of-the-mill, shocks. This was an accelerator. The creditor to the UK was the US. And that, the reconstruction of Europe
Okay.
anchored Europe for a while in the dollar.
Okay.
So these are big events, right? You're talking about the Marshall Plan. I mean, what I'm saying is that, it wasn't just a trade or, it wasn't just financial asset developments. It was much deeper than that catapulted that transition. And I'll conclude here, in the interwar years between World War I and World War II, you had a period there where there were 2 reserve currencies, both the dollar and, because in the 20s, already in the 20s, when the British pound was still, bond issuance, global bond issuance in New York soared. It was very clear already that the dollar was poised for New York to be a financial center, but you had that period of duality in there.
Okay.
We don't have a duality at the moment.
Right. 80%.
Yeah.
Yeah. So
This is the last one, right?
right. Yeah. It's
Okay,
yeah.
okay.
Rest assured. So political economy and fiscal policy, I would summarize for myself for that. Okay. So please join me thanking the speaker, Carmen Reinhardt.
네, 감사합니다. 좌장이신 김진일 고려대 경제학과 교수님과 카르멘 라인하트 교수님께서 이렇게 귀한 시간 내어 본 행사를 빛내 주셨습니다.